Money Vikings, Money Viking G here. Welcome back to the show. Thanks for tuning in. I wanted to do an interesting one today. I want to do kind of a quick one on the 2008, I think it's 2008 to 2010, but 2007, 2010, but people call it the 2008 financial crisis. I think for the younger viewers out there that are maybe in your mid-20s, I'm trying to think back now, it's surprising. 2008, it's 2025, so you're talking about 17 years ago now. So if someone is a middle-class wealth builder that's 25 years old, then theoretically they were about 11 or 12 years old at the time. When you're 11 or 12 years old, you might remember some stuff about your family and what it went through, but you may not. So I want to do a little bit of a recap of that and talk about some of the things we can learn now to be prepared for anything that might be coming. What was this thing, the 2008 financial crisis? So in a nutshell, basically what happened, and I'm just going to be pretty blunt about everything and just to the point, is that essentially there were very up to that point for many years before then, maybe for about 5 years before then, 6 years before 2008, there were very relaxed rules about mortgages. And basically there was a joke that would go around that if you basically had a pulse, you could get a mortgage. And at one point you could get a mortgage for a house without even having a job. So that was kind of strange too. So the government and the lending industry got very relaxed about the lending of large sums of money to buy homes. Now, for those of us in real estate, we know that homes take a lot. They take a lot of maintenance and they have a lot of costs. It's great. I'm still a believer in home ownership. I still believe that owning a home can be a good long-term investment in addition to a great place to live, in addition to creating community and stability and owning a piece of property, owning a piece of a community that you're part of. I think all that has a lot of value in a society. I myself, I don't want to live in a 50-story high-rise in an apartment I don't own. I don't want to live like that. But that's a lifestyle choice. I like owning a home. Maybe that's just because I'm American or something. I'm not sure. I think that might be an American thing. But I like having a little yard. I like all that. I like the space. I like the peace. I like the quiet of the whole thing. But anyway, it does come with costs. It comes with costs of maintenance. It comes with costs of taxes. And it comes with the cost of a mortgage. So if you can imagine people were just being handed houses like candy at Halloween time, you can imagine that was going to probably set us up for a big fail. Now, there was a theory that went around that said that, well, even if people are stressed financially, even if there is a quote unquote small recession or they lose their job, they'll do everything they can to hold on to their house. Well, that ended up being yes and no, and a lot of no. The big reason it became a lot of no is because those houses lost about half of their value very quickly, and because the prices were inflated. And a person will not pay their mortgage, they found, for very long if they perceive that when they bought something for $500,000 and they're paying a $4,000 a month mortgage, and then all of a sudden the thing is worth $250,000, there's something psychological about that. In addition to just the financial problems where they might have lost their job or lost their income and they just can't afford the big mortgage anymore. So anyway, long story short, on a massive scale, all this money was being pumped into the system through housing, and it basically one day all collapsed. Sometime around 2008, I believe it was late 2008 when everything started falling apart. I myself was taking a short sabbatical from my full-time job, and I was actually trying to get a job. I was actually trying to start a job in the arts as a painter and making sort of Southwestern art. I was selling a few things in galleries in the Southwest. And one day I walked into the gallery. I had sold a couple pieces. I think I was bringing a new work of art in to put up on the wall and hopefully sell. And the owner, who was older and wiser, said to me, "Do you have a job, a stable job to go back to? Because He said things are about to get really bad. And he was right. They did. So it took a long time. It took many years to pull out of that in terms of the economy. But there was, some of the current sort of situation we have now is basically reverberations of that. You have to realize how things from the past affect the way things are today. So there used to be interest rates used to be extremely low for a long time. Well, that was all spurred by the Great Recession. The interest rates were pounded down to 3% in order to get people to spend and keep us out of a depression, because basically that housing crisis did push us into a Great Recession. So bottom line, that affected things. Now we know interest rates are higher. The Fed has less tools to work with, et cetera, et cetera. Okay, where am I going with this? Long story short. So I personally was trying to go into a career in the arts. That didn't work out the way I thought it did. It worked out in other ways, which is fine. But that's the way life goes. That's the way things go. So what can we learn from this? What we can learn, you have to realize too, there was a lot of psychological stuff going on. So I remember our 401ks, people's 401ks dropped in half pretty quickly. Pretty quickly, they dropped in half. So you can imagine having $100,000 one month, and the next month it was worth $50,000. Now, the biggest lesson I would say from this, there's a few lessons. Number one, the people that panic sold got into trouble. I knew people that panic sold. They sold all of their stocks because it lost half its value. They baked in those losses, and they never got in because basically after the aftermath of that was taken care of and it had gone down, the stock market went on a tear for, you look it up, I think a decade, for a long time. For a long time, it went up a lot until the pandemic, I think. Then it went down after the pandemic, then it went back up again. So the bottom line is making decisions based on emotion and short-term thinking. So that was, number one, a big mistake of many people. We don't want to make that mistake again. Second big mistake, people got way over leveraged into real estate and other things. And when that gets called on the carpet, people get screwed. So that is something to keep in mind as well. You don't want to over leverage yourself. You don't want to have too much debt into an asset that can lose a lot of value, because then you're stuck holding the bag and you're stuck underwater. And again, you don't want to be a forced seller when an asset is down. When assets are down, you want to be a buyer, in fact. And then you want to dollar cost average and all that. Okay. So that was the second one right there. The third thing I would say is that, you have to keep somewhat of an eye on the macro situation in terms of what the government and what others are doing, because basically that was a government and industry created problem. And so that is why at this stage in life, I am a big proponent of Bitcoin, because it has the ability, I think, to be sort of a hedge or sort of a help balance out the risk profile of a portfolio. Now, is it volatile? Yes, it's very volatile, but I do think there is a place for it in a well-balanced, well-thought-out portfolio. So anyway, that was a little story from the 2008 financial crisis. I hope you found that interesting. If you're on the younger side of viewers, go check it out, because it is interesting to look into. It really could have been a depression. There were a lot of companies that got bailed out. The big banks got bailed out. That has reverberated as well today, because it created a lot of distrust, because you had banks doing bad things and the wrong thing. And then when they lost a ton of money, they got bailed out by the taxpayers, and that created a lot of resentment. So it's been, interesting times, and I assume we'll continue to live through interesting times. But as you can see, the past does affect the present moment in terms of views and optics and rules and all that. So interesting stuff. What are your 2008 financial crisis stories? I'd love to hear some of your comments down below. And thanks for watching. We'll see you on the next one, guys. Bye.